What is going on, everybody? It's TG here. Sorry we were out of town for a couple of days for a tennis tournament, but we're back now and we're making videos. But not really happy to be back, honestly, seeing some of these numbers. Big losses overall in all three indexes, and especially, again, the Chinese indexes. This is the China ETF, internet ETF for China, and it is down a lot today, over 5.3%. BABA got absolutely hammered, about 5.5%. At one point, it was down 7%, but it recovered about 1.5% towards the end of the day, finishing down 5.5%. More bad news coming out, it seems like every day, with China and some of these other stocks. But I want to give you guys what I personally believe, what I've read, and what different analysts believe is a possibility on what is actually going on and why China and some of these other stocks seem to be getting sold off so excessively. Now, obviously, we know that the entire Hang Seng index has been on a decline, and this is because of this Evergrande crisis that seems to continue to happen. Potential defaulting and their stock just getting obliterated. Just in a couple of days, we've watched the stock go from $20 down to $2, and the Hang Seng index, under 23,000 at one point last night. I was watching it on the bus ride home, and I was just shocked by seeing the sell-off that we've been seeing, because of this crisis. And if you guys want to look up what's going on, people can explain it a lot better than I can. But it's a big deal, and there's a lot of investors in this Evergrande company that are they're outside their office, they're protesting, people are getting beat up. It's bad right now, and because of that, people are scared to invest in China. They're scared to invest in anything related to China, and that's why stocks like Alibaba can lose over a third of their value in 6 months. Year to date, down a third of its value. Past year, down 45%. So this is one of those scenarios where you have a choice. And when I say a choice, I'm speaking of an opportunity to buy, to sell, or to hold. Today, I only held. I bought a little bit of Baidu, but I don't have any funds. That's the problem. I've deployed all my funds these past couple weeks buying BABA on the dip this past month, in the 170s and the 160s and then the 150s. So I'm holding now. I don't have any more money to put in. I've deployed all my money into Alibaba. I deployed all my money into Baidu, which also took a big hit today. Obviously, I'm holding my Apple still, which was down a pretty decent amount today, down 2.1%. Obviously, not as much as BABA. And then I have my Ford stock as well, which took a massive hit today, about 5.39%. So my investments today did bad. It was a brutal day. It was down about $9,000. But I'm gonna hold, and the reason I'm holding, especially for Alibaba stock, is because I look at fundamentals. I know a lot of people look at technicals, and that's great. And however you can get an edge, you do you. I don't want to debate technicals versus fundamentals. I personally believe in fundamentals in a company long term, and I think that's what really drives a company in the long term, and that's what I'm trying to be, as a more long-term investor. Obviously, I messed up with Alibaba by only going about 6 months out, so now I've expanded those options to March and June of next year. As you guys know, we're in September right now, so we have the rest of September, October, November, December, January, February, March. We have about 7 months for these options, and then another couple months after that for the Junes. But yeah, I'm expecting a bit of a recovery in Alibaba. All the articles that come out are talking very highly of Alibaba, and a lot of funds have exited BABA already and are waiting on the sidelines for some good news. Obviously, we've been hit with bad news when it comes to regulations and all that good stuff, but I do think there is going to be a little narrative change. Now, when we actually do look at the technicals of Alibaba, I want to show you guys on Robinhood, because Robinhood has a pretty good chart. So we'll look at that on Alibaba as well. That portfolio is not looking good for that account. It's actually my friend's account that I work on with him. Then not going too well. But if we actually look at Alibaba, and we dive into the technicals, you're going to notice something, that stands out a lot. So we add this in right here, the relative strength index, and we're going to move me over for a second, and go out 1 year, make it a little bit more accurate. So looking at this right now, the RSI level is trading ridiculously low. Ridiculously low. It has been on a downtrend, obviously, since it hit, $317 a share, and has just been obliterated since then. Now, one of the reasons I do think that Alibaba is going to recover relatively speaking, compared to some of the other indexes such as SPY, such as NASDAQ, and some of these other ones, is because of how much it has been sold off market value-wise and how much the company has actually grown. And we talked about that in a video before, so I don't want to go too much into details. You guys can look at that in my previous video. But when we actually compare the S&P index and BABA, we look at the 1 year, S&P is still up 33%. Just ridiculous. Up so much in the past year. You look at BABA is down massive for the 1 year. Down 45%. Now, obviously, that is just one factor. But the reason that I like BABA so much is the fact that BABA has continued to grow big. Their revenue year over year is huge. They're continuing to make tons of money. I mean, this company makes a lot of money. You look at a company like Alibaba, it makes a lot of money. A lot of these Chinese companies, they make a lot of money. Even looking at companies like Baidu and some of these other ones, they're making a lot of money. And they have huge year over year growth. And that's something you have to look for in a company. Are they growing? What's their valuations? What's the future of the company look like? And you look at stuff like BABA, you look at Baidu. Baidu is about the Google of China, if you guys didn't know. I made a video about that as well if you want to check it out. But you look at a company like this, and it makes a lot of money. It makes a ton of money. And it's growing huge. You look at annual year-over-year growth, it's massive. I mean, 2017, for instance, they were doing $158 billion in revenue. 2021, they're doing $717 billion. Net 150. That is massive year-over-year growth, okay? And so you look at that, okay, all right, the company has grown massively, from 158 to 717, almost 5x, right? That they've grown. And then you compare that to the stock price. How is it done in the past 5 years? Well, 2017, we're right here, 2017, what is it today? September 22nd? Okay. September 20th. $178 a share. The stock price has declined 15% since 2017. Okay? Yet the company itself has grown at a massive rate. Now, obviously, there's a lot of factors that goes into this when you talk about forward-looking companies. And obviously, there's some issues with Alibaba and government regulation and tech crackdowns that have happened. Okay, maybe it stunts the growth a little bit. But you cannot deny the fact that this company is growing fast. 40% year-over-year revenue growth. That's huge. This company is growing huge, and also their profits are going to be growing huge as well with their cloud business, which is now profitable for the first year. E-commerce as well is another sector that is growing massive. If we actually look at e-commerce growth, it is crazy when you actually look at it and see how much e-commerce is growing. E-commerce is expected in just the U.S. alone to grow 13.7%. Now you look at something like Alibaba, which is in China. China has over 5 times the amount of people in the U.S. Alibaba, in their last earnings quarter, talked about how they had over 987 million monthly active users. That's over 3 times the size of the U.S. alone. So you have a company that is just growing so fast and so rapid, and you have a company that's putting numbers out like this. Net income of 150 billion, revenue of 717 billion, year-over-year growth massive. So much cash on hand as well, 321 billion. If we look at that and just talk about the cash on hand alone, USD to CNY. If you actually look at this, it's massive. I mean, $207 billion. I mean, it's just, it's crazy when, comparing this. $50 billion US if just cash on hand for Alibaba, and that's actually even more now. So, and you have the actual company that's only valued at a 400 billion market cap, 410 after today. This hasn't updated. $410 billion market cap, and over 12% of that, 12.5% of that is just cash alone. And then you look at some of the other factors, their e-commerce that's growing like crazy, their cloud that's growing like crazy, their advertising business that's growing like crazy. And you start to ask yourself, okay, what is the future of this company going to look like, and what is it going to do? All right, and that's why I am willing to stick with Baba. If I have to roll my options out to 2023, I will. I don't want to, because you can make a lot more in the short term. You make more long term, but based on the time, because time is money. So you're putting it out for a year and more, and you're only making 2 or 3% more. It's not really worth it, and that's how some of those really long dated options are. But one of the reasons that I think that this is going to be a good play is because look how much can happen in 6 months. We're 6 months away. Alibaba in 6 months was $240 6 months ago. So a lot can happen in that time. It's extremely oversold as well, and I genuinely believe that in the long term, this company goes up. Short term, it's going to be rough. There's a lot of negative out on the company right now, but there is also a lot of positive that can happen, and a lot of positive that's been squandered because of all this. So again, it's not just Alibaba, it's all of China stocks. You look at this is down 31%, not as bad, but from the peak, it's down 55%. So it is a little bit about the exact same as Alibaba. So it's a tough decision because there's so much risk involved, and I'm not a financial advisor. I'm just, someone who's trying to get out of a situation, trying to make a positive out of it. Who's stuck big, who's down massive, took a massive loss, and we're trying to grind our way out of it. So I don't want to panic sell. I want to hold on to it, and we're going to hope for the best. But this is a little bit of a longer video. I do want to go more into depth into some of these other companies soon, but right now, obviously, it's a little rough, and I don't have a ton of time. I've been so swamped with school and tennis. I want to give you guys a video, give you guys an update on everything that's going on. But, anyways, guys, just have a wonderful day. If you enjoyed this video, obviously, subscribe. It means a ton to me. Hop in the Discord and talk. But, I'm holding. I think it's a good opportunity to buy the dip, and, yeah, I'll talk to you guys later. Take it easy, guys. Bye.